Here we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So as we can see here, the stock price is starting to have a little bit of trouble after making this recent failure, coming in right around $5.70. What we're looking at here is the hourly price chart. So each candle on this time frame represents a 1 hour trading period. And we will be outlining some important support and resistance zones for this stock. Hopefully we can identify some profitable trading strategies. So as we can see here, the share price itself really did manage to make a bit of a bounce, coming in right around $4.95. I really should have marked that in here. So $4.95 would be this sort of near-term low here. If we were to move down to the shorter term time frames, it would be a bit more obvious that this was the main support zone. But as we can see here, there are a couple of factors here that are working in the same area. One would be this rising purple line here, which is the 100 period EMA. And then in addition to that, we have this 38.2% Fibonacci retracement zone that we have been watching now for quite some time. This is sort of this orange zone here. So as we can see here, these two factors came into contact with each other right around the same area. And this did manage to hold up share prices, even though we did actually lose support at the $5 psychological level. So here's a bit of an example showing that, maybe the psychological levels are not always as important as they seem. Sometimes they are important because it can happen quite often where you see a large number of buy and sell orders that are parked right around those levels, $5, $10, $100. So, you can see instances like that, certainly. But, it really does appear to be these technical price levels here that managed to keep prices supported, even though we did lose that support zone right around $5. So even though those orders were filled, we did see share prices bounce higher. The near-term resistance zone that we're currently watching now comes in at $5.54. That would be this price high here. And the negative aspect of this is that we have not yet been able to retest those prior highs, which came in at $5.70. So, the real question here is, whether or not this main price rally has now run its course. We did see a fair amount of strong buying activity and upward price movement for this stock in a very short period of time. And if we sort of move out a bit on the price chart, we can see that this is a support zone that has been tested now on several occasions. So, the main issue here going forward is whether or not we're going to be able to make a successful retest of this double top resistance zone, which comes in just above the $6 mark. Longer term, what we really need to see for this stock is the ability for share prices to maintain a foothold above the 61.8% Fibonacci retracement zone that is found within this broader trending move that has developed recently. But if we are able to maintain this positive trajectory here, this does open up a fair amount of room to the top side for share prices going forward. As we said previously, this main level to watch here, this double top zone at the $6.01 level, an upside break there should open up the door for share prices to at least be able to run much higher from there. Currently, there really isn't much to be found in the way of resistance above that level. We do see an old price high roughly that came in right around $6.30. But, this near-term price level at $6.01, a break there should trip some stops and allow share prices to start to move in the positive direction at rates that are fast enough to relatively easily overcome that $6.30 mark. So from there, the next level to watch, as you can see here, there really is nothing on this chart, which would suggest that share prices would be likely to stall in advance of this $9.45 zone that was posted roughly toward the end of 2023. So, we could be on the brink here of a fairly major move. But I do think that there are sort of two outlooks that should be had here because, a failure at 601, again, is going to be sort of equally bad. I do think that a failure here could eventually lead to a retest coming in right back at $3.60 again. But a break here to the top side could send us to share price levels that are close to $10. So I do think that currently this is a major question here, and this is the main line in the sand. There just really isn't much here to be found in the way of resistance. So if we do see a break here, an upside price movement, that should be enough to allow share prices to at least take the pressure off of the downside and start to refocus the attention back on that $10 level. Specifically, I'm not saying that exactly we would reach that mark. I mean, that is sort of a round number, a psychological round number, and I really don't like to focus on those very much. But at the very least, you could be looking at another push higher into this $9.45 zone. Overall, an upside break here should take long-term pressure off of this stock to the downside. If we sort of just move back here in the price history, we can see that there is still a huge amount of negative momentum that is being focused on NIO share prices. Buying this stock, you still are sort of facing a freight train because there's just so much momentum that is focused in the other direction. With this continued bounce off of $3.60, this ability that the stock has shown to move above that level and hold support at that level. I really am looking at this $6 level currently, this $6 retest, as the next major barrier that could unlock some fairly significant share price movements to the top side. So this does mean that we're at a fairly critical inflection point at the moment. I don't think that we should just expect share prices to rocket higher in any stock, but now that we have been able to develop a long-term base here for share prices, I think that this does suggest that we could be on the verge of something that's much bigger for NIO. From a technical perspective, we can't really expect to see share prices that are moving significantly higher at this point, but there are several reasons here to believe that the paradigm is shifting and that the worst days for this stock could now be in the rearview mirror. Looking ahead into next week, I do think that it's encouraging that the stock did manage to find some support right near this 38.2% Fibonacci retracement zone. However, we will need to see share prices hold that level in order to keep pressure focused on the top side. If we do see a break below there, I think that the next level that we need to be watching would come in just above the $4.40 mark. This is essentially the 61.8% Fibonacci retracement of this most recent ascending move higher. And then ultimately, if we did see a break below there, I do think that would be sort of the worst case scenario, because at that point, I think that the most likely outcome for this stock near term would be then a retest of this prior support zone at $3.68. So there are several factors that need to be watched here, and there are several price zones that could become much more important as we head into next week's trading. Here's the current stock market update for NIO Incorporated, stock ticker NIO. Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.